please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Asian markets, they opened up higher in early trade, but they've come off those high points of the days, and now they're trading off the day's high. So let's pull up the intraday chart of the Nikkei. That was up close to around 0.5%. Now it's sitting with a gain of around 0.2% to around 0.3%. So the intraday chart is telling you the picture. And the Kospi now is down nearly around 0.5%. We should get that market as well up for you on the screen. It had opened in the green. Now it's virtually moved to the low point of the day. Let's pull up the other couple of markets as well. The Straits and the Taiwanese index. Let's see what the early indications are coming in from there. Yeah, those are the rates. In fact, the Straits as well as the Taiwanese index, both of them sitting with a bit of a cut. Remember, markets in Indonesia, Malaysia, as well as Singapore, that Singapore index, in fact, is closed today. So just keep that in mind. Volumes will be on a bit of the lower side. But the SGX Nifty should come up for you. Let's see what the early indications are. Yesterday, at one point of time, we were down 70, 80 points, and we pulled back to end with a cut of around 50 points. Early indications are maybe we'll start off in the red. Let's see where we go from there.
Okay, the start in the red, and that's what the SGX Nifty suggests for the Indian markets. But on Wall Street, the markets ended mostly higher, with Nasdaq clocking in record high and ending almost 1% higher on deal-making activity, which lifted the technology as well as the media sectors. Now, the S&P 500 also closed higher, climbing around 0.3%. However, the Dow underperformed a tad bit. It ended marginally lower as the bank stocks actually declined. Now, remember, in terms of the economic data, retail sales rose 0.8% in May, the biggest gain seen since November. The Labour Department also reported that weekly jobless claims fell to a near 44.5-year low last week, pointing to a tightening jobs market. CNBC's Contessa Brewer gets us a wrap of all the action on Wall Street.
Well, on that one, let's get in some opinion on the way ahead for the US markets.
Okay, US President Donald Trump has reportedly decided to impose tariffs on about $50 billion in Chinese imports in a move that's likely to escalate the trade tensions between the world's two biggest economies. Now, the list is expected to include between 800 and 900 products compared with the original list of about 1,300 products published by the US Trade Representative back in April. Now, the tariffs come at a time when Secretary of State Mike Pompeo is currently in Beijing discussing the next steps in the effort to get North Korea to abandon its nuclear and missile programs. The round of tariffs could make China reluctant to cooperate with the US or North Korea. Beijing has said that it would retaliate if the US imposes further tariffs on its imports. Okay, the IMF chief Christine Lagarde has warned that Washington's new import tariffs will undermine the global trading system and could ultimately hurt the economies. Now, she adds that recent measures could cause great risk from 2020 onwards.
Well, in the European markets, stocks closed higher after the ECB, that's the European Central Bank, provided the market with cues on the end of its massive bond buying program. The European Central Bank said that the interest rates would stay at record lows at least through the summer of 2019. So that was read more dovish, actually. All three frontliners ending well in the green. You pull out some of those peripheral indices as well. They as well did end in the green. The Italian index, that was up nearly around 1%. You had the ATHEX as well. That did quite well. Here's a report filed by CNBC's Annette Wesch-Bach with the highlights of Mario Draghi's presser.
On that note, let's also listen into what experts are making of the ECB decision.
The only way they could have been more dovish is by extending the asset purchases even further beyond December. But they have signaled that they've had this phrase in their forward guidance that they're going to wait until well beyond the horizon of the end of asset purchases before they raise interest rates. And now they've said that well beyond the horizon means at least 6 months, and at least as in possibly more than that. So it looks like interest rates in the euro area are still going to be negative when President Draghi's term ends in October of next year.
Well, in the currency space, the euro is headed for its worst weekly loss in 19 months after a cautious European Central Bank signaled it will keep interest rates at record lows well into next year. While the US dollar as well should come up for you, that continues to gain against the yen.
In the world of commodities, crude oil edges higher after Asian trade is settling lower in overnight session. Remember, OPEC countries in the June 22nd meeting will be contemplating production levels that could potentially tip the supply-demand balance, leading to a risk of an oversupply.
Well, the FIFA World Cup has kick-started in Moscow. 32 teams will fight it out amongst themselves for the coveted trophy. In the first match, the host Russia, they thrashed Saudi Arabia with a scoreline of 5-0. Remember, later tonight, Portugal will play Spain. That's going to be an exciting one. We'll slip into a short break. As we do that, we'll give you a glimpse of the inauguration ceremony as well as highlights of the first match.
Welcome back. Well, back home on the Lal Street, it was a weak day of trade. The Nifty managed to hold on to the 10,800 mark amidst high volatility. Now, the Sensex shed over 150 points, but the Bank Nifty underperformed a tad bit, ended about 80 points in the red. Mid-caps relatively outperformed by ending flat with a tad bit of positive bias. But how the Q stacked it for the day? Reema joins us early this morning to tell us more. Reema, good morning. Over to you.
Hi, good morning. Yes, yesterday we snapped that 4-day winning streak and ended in the red in the benchmark indices. Well, if you look at the global cues, the Western markets, US and Europe, ended higher. However, Asia doesn't seem to be following suit. The early rates in Hang Seng as well as the Chinese markets are currently in the red. But if you look at the US markets, Nasdaq was at a record high. The dollar had hit a 11-month high. Even in the European markets, most of them ended significantly higher, gains of close to about 1.5%. And this is on the back of a dovish taper from the European Central Bank. So yes, while they did indicate their large quantitative easing will end towards the end of 2018, they also signaled that interest rates will be steady, not just this year, but through the summer of 2019. So the fact that interest rates will be steady for an extended period of time was taken dovishly by the markets, which is what led to the rally in the European markets as well as in the US markets. Closer home, markets in Indonesia, Malaysia and Singapore will be shut on account of Eid. In cues to watch, we will be tracking Bank of Japan, though no fireworks expected. In fact, pretty much status quo when it comes to their bond purchases as well as interest rates. That apart, keep your eye out on anything related from Trump and whether he will go ahead and impose tariffs on $50 billion of imports from China. Reports suggest that he's already decided on that. So Street will closely watch that. For our own markets, yesterday the benchmark indices were down close to about 0.5%. You map all the volatility through the week, we seem to be oscillating within a tight band because on a week-to-date basis, the gains are just about 0.2% on the benchmark indices. Yesterday, we saw a big sell figure from the FIIs close to about 1,400 crore, while the DIIs bought about 576 crores. Some of the key levels to watch in the Nifty, one will be the intraday high of close to 10,900 that we hit earlier this week. And on a closing basis, it will be levels close to that 10,850 mark.
All right, Reema, thanks so much for that. What about stocks we're watching out for today?
The big one will be TCS, because the board will be meeting today to consider a buyback. Remember, if they go the entire 25% of paid up equity capital as well as free reserve, then they can go up to 21,000 crore rupees in terms of a buyback size. So that's going to be the key to watch. Avenue Supermarkets, Supermarts or DMart, as we know it, held an analyst meet yesterday. It was during market hours, but just a quick run through of what came out. They said they will be opening 50 to 60 stores, not 5,060 stores. 50 to 60 stores. The existing margins are at a peak level, and e-commerce is less than 0.01% of their overall business. The RPG Group also held its analyst meet yesterday. So just taking forward what came through out of CIAT, they're saying they're looking to increase their presence in the passenger vehicle segment, where their market share is currently at 8 to 10%. The competitive intensity has increased in the two-wheeler segment, and they're scaling up their highly profitable specialty tires exports business. Macquarie maintains an outperform rating, kept a target price of 2,000, significant upside from current levels. Wipro has announced a partnership for a multi-year cargo management engagement with LATAM Cargo. Virinci has announced that they've commenced phase 2 of healthcare expansion in Hyderabad. Vakragi, the Biligurt stock, which had a one-way down move at the start of the year, just in the last few days, Vakragi has started moving up, and yesterday as well closed with a gain of about 5%. Numbers are out. The profits have halved to 71 crore versus 145 crore. There's also a change in the capital allocation policy, a little light on details, but the street will await whether the buyback is still on or no. And Gati, the auditors of the subsidiary company, were unable to comment on the provisions made by the company, and hence they gave a modified opinion. That's the clarification coming through on this one. Back to you.
Okay, Rima, thank you so much for that entire list. But it is time now for a quick break. Up next, Sanjeev Bajaj talks about the Allianz partnership. Get you the excerpts of that exclusive when we return.